Hello, I'm Alan Mullane, Economics Director at Glenigan, and in this short video I'll be discussing our forecast for UK construction activity over the next 24 months and taking a closer look at how the infrastructure sector in particular is likely to be affected. Needless to say, the construction industry is battling with unprecedented market conditions this year. The COVID-19 pandemic has dramatically reshaped the outlook for UK construction, as it has for the UK and world economies. The pandemic and the lockdown of much of the UK economy from late March inflicted a massive external shock on UK construction. The value of underlying project starts fell 47% during the second quarter. Whilst considerable uncertainty still surrounds the outlook for construction and the wider UK economy and the course of the pandemic itself, the second quarter of this year is still expected to mark the low point for the industry. A marked rebound in construction output and project starts is forecast for the third quarter, following the lifting of lockdown restrictions. And the industry is forecast to then see a more gradual but sustained recovery over the subsequent 2 years. We expect that by 2022, the value of underlying project starts will total £52.4 billion, just 1% below 2019 levels. However, construction industry growth will be shaped by the path of the pandemic itself, as well as by the response of the private sector and in particular the government to the crisis. Indeed, government infrastructure investment is forecast to be a key driver behind the construction recovery and for the wider economy over the next 2 years. Given the exceptionally high level of uncertainty over the outlook for the UK economy, arising from the pandemic and the UK's future relationship with the EU, Glenigan has prepared 2 alternative illustrative scenarios alongside our central forecast. Under our more pessimistic scenario, the recovery is disrupted and delayed by a second wave of COVID-19 infections and a partial reintroduction of lockdown restrictions over the winter months, which disrupts sites, and in addition to that, there's a poor outcome to post-Brexit trade negotiations. A key factor behind our more optimistic scenario is the industry rapidly adjusts to COVID-19 site working practices, enabling improved site productivity and a faster recovery in construction output and project starts as a result. Encouragingly, the UK's performance to date has outperformed our initial expectations, in large part because the site lockdowns in England during the second quarter were not as widespread and long-lived as were initially feared. As UK construction gradually recovers over the next 2 years, the pattern of industry activity is set to shift, reshaped by the wider economy, government policy and social changes in the aftermath of the pandemic. A weak UK economy is expected to constrain construction activity, with private sector workload being particularly vulnerable. UK manufacturing faces weak domestic and overseas demand. In addition, UK manufacturers will have less favourable access to the EU single market and potential disruption to EU sourced supply chains from next year. Against this background, we anticipate that a continued weakening in manufacturing investment. In contrast, warehousing and logistic premises are forecast to remain a growth area, bolstered by long-term growth in online retailing, which is driving the demand for logistics space. The pandemic has actually accelerated the growth in online sales and will help to the further expansion of warehousing and logistics activity in both 2021 and 2022. In the retail sector, construction activity is forecast to decline as weak consumer spending and the growth in online retailing accelerate the restructuring of the retail industry and depress the demand for more traditional retail premises. Office starts are forecast to decline sharply this year as the lockdown exacerbates a cyclical downturn in the sector. Project starts are forecast to recover during 2021 and 2022, supported by a rise in refurbishment projects as tenants and landlords adapt premises to accommodate to changing working practices. New build office projects are likely to be slower to recover as tenants and developers assess the likely impact of rising unemployment and a potential structural shift towards more remote working and the impact that's likely to have on the long-term demand for office accommodation. The COVID-19 pandemic has hit private housing activity hard. As suspended sites are reopened, house builders have prioritised sites that are close to completion. Near term, there has been a marked recovery in the housing market and new house sales, in part fueled by pent-up demand post-lockdown. However, over the coming months, home buyers' confidence will be dented by rising unemployment and the poor economic outlook, factors that are expected to temper the recovery in private housing over the next 2 years.
Hi, I'm Rhys Gadsby, Economic Analyst at Glenigan, and I'll be taking a closer look at the prospects for the infrastructure sector and where opportunities for sector growth may lie. As Alan mentioned, greater government investment is forecast to be a key driver behind the industry's recovery over the next 2 years, and the forthcoming spending review is expected to provide additional funding for key areas of social infrastructure. Affordable housing activity picked up during 2019, and whilst the pandemic has caused a short-term fall in starts this year, renewed growth is anticipated from 2021. In contrast, student accommodation work faltered during 2019, and a further contraction in student accommodation work is expected this year, with only a limited recovery in the subsector during 2021 and 2022. An increase in school building projects is forecast to drive a recovery in the education sector during 2021 and 2022, as local authorities tackle the shortage of secondary school places. However, a fall in universities' capital spending is expected to temper overall growth in education sector work. The outlook for the health sector is brightening, with promised increases in NHS capital funding expected to lift project starts over the next couple of years. The Nightingale Temporary Hospital Programme has boosted project starts this year, and starts are subsequently forecast to gather momentum during 2021, rising by 27% as NHS trusts develop and implement their investment programmes. Greater investment in transport and logistics is also a government priority as it seeks to improve UK competitiveness. While civil engineering project starts, along with other sectors, have been disrupted and delayed by the lockdown, the sector is set to recover strongly by 2022. The government has pledged to significantly increase investment in UK's infrastructure. In many areas, such as energy, broadband, and other utilities, such investment will be delivered by the private sector. Greater investment by the water industry is anticipated over the next 2 years as the sector's new AMP7 investment programme begins to lift industry spending from this year. Where additional public sector funding is potentially available in areas such as roads, it may take time before additional projects are shovel ready. For example, the government announced that the second road investment strategy, or RIS2, will spend over £27 billion between 2020 and 2025, taking forward schemes such as the dualling the A66 Transpennine and upgrading the A46 Newark bypass. Whilst this investment promises long-term growth in infrastructure activity, few of these new schemes will be ready to start in the near future. Accordingly, we anticipate that initially additional funding will be directed at areas such as tackling the maintenance backlog on the nation's roads. In addition, Network Rail's new 5-year investment programme, or CP6, is now underway. Within the new programme, a marked increase in funding is being directed at maintenance and renewals work. Existing major infrastructure schemes, including Thames Tideway, HS2 and Hinkley Point, are also forecast to lift civil engineering output over the forecast period. The £1.4 billion Stonehenge Tunnel is currently scheduled to start in 2021, although important planning and contracting hurdles have yet to be cleared. So despite the backdrop for the industry, there are a number of opportunities for businesses to be aware of. If you'd like to discuss these in more detail or to get more information, please visit our stand and we'll be happy to help. Also, if we can help you develop your business strategies or build your sales pipelines, please get in touch. But for now, thank you very much for watching.